In order to be ready for one of the biggest economic catastrophes in history, Bill Gates has been selling his holdings. Gates is well recognized for being a CEO, and with the assistance of his fund manager Michael Larson, he's even better at capital growth. Over the previous 20 years, Gates has generated $50 billion in revenue. Gates and Larsen made billions during the bull market and were well prepared for the dotcom boom during the 2008 recession. This enabled them to continually outperform the S&P 500 and increase their wealth. Gates and Larsen are currently making active preparations for what will turn out to be one of the worst recessions ever. It is widely known that the economy is struggling. The Russia-Ukraine conflict, declining consumer savings rates, record-high debt levels, increasing inflation, and historically poor consumer morale are all affecting the U.S. economy. In 2021, the government injected trillions of dollars into the economy. 2022 is the exact opposite. Gates is especially concerned about the artificial trap that the Fed set for itself as a result of the government withholding trillions of dollars from the economy. A double-edged sword is currently slicing the economy. One edge is the speeding up of inflation, and the other is the enormous amount of government debt. Now, the government must decide between destroying the US dollar and risking bursting the debt bubble by crashing the economy. The Fed has chosen to slow the economy at the risk of an unprecedented collapse as its course of action. The Federal Reserve just increased interest rates by 75 basis points, the biggest increase since 1994. This increase significantly slows inflation, but it comes with significant risks. For starters, it sharply raises interest rates, which means that borrowing for commercial investments and mortgages will cost much more. Recently, rates on 30-year fixed-rate mortgages climbed by the most in a single week in 35 years. The economy could enter a recession or depression if this interest rate increase slows it down too much and pops the debt bubble already in place. The bare premise that Bill Gates discussed in an interview is entirely comprehensible. Recessions and certain oil prices have a strong correlation. You can see from the periods when the U.S. economy experienced recessions that whenever Brent crude oil crosses $100 per barrel, a recession almost always follows. At the moment, Brent crude oil is around $120 per barrel, which is a warning sign that a recession is imminent. Because rising oil costs are a tax on consumers, a recession usually always occurs once the price of oil breaks the 100 mark. High gas prices effectively deprive consumers of money, which not only reduces their spending power but also sharply dampens consumer confidence. According to the University of Michigan's Consumer Sentiment Index, consumer sentiment is at its lowest point since the 2008 financial crisis. Gates and Larsen recognized that 2021 represented a period of enormous speculation, the exact opposite of which is an impending significant economic slowdown. The economy operates in cycles, with debt levels continuously peaking and bottoming in a cyclical form. Gates and Larsen have been executing a number of hedging measures in anticipation of a collapse in the U.S. stock market. One of these tactics calls for shorting equities as opposed to long positions. The public is not required to be informed of short positions. With a new proposal, the SEC is attempting to change this, but until that passes, we're unsure of which stocks Gates is actually shorting. Despite this, we do know that Gates is shorting Tesla stock because Elon himself confirmed it. Gates promotes himself as a strong proponent of environmentally friendly technologies, but Musk thinks that his short position in Tesla undermines this. Musk tweeted, "Since Gates still has a multi-billion-dollar short position against Tesla while claiming to help with global warming, I guess I have some trust issues with him too." Elon stated how it was $500 million, but then Tesla went up a lot, so now it's $1.5 billion to $2 billion to close it out, even though Gates is already down over $1 billion on his short position in Tesla. Gates and Musk were scheduled to meet to discuss philanthropy, but leaked letters indicate that the meeting was canceled due to Gates' short position on Tesla. Elon texted, "Excellent," in response to Gates' 7:20 on Wednesday to be clear. Elon said, "Cool, do you still have a $500 million short position against Tesla?" when Gates informed him that he had just landed. Gates said, "Sorry to say I haven't closed it out. I would want to consider philanthropic ideas," acknowledging that he was in a precarious position. Musk asserts that having a short position in Tesla is not at all top secret and that these messages that were released were accurate. Even though the price of Tesla stock increased significantly in 2021, the rise of NFTs, such as the Bored Ape Yacht Club, was the pinnacle of the bubble. NFTs rose by hundreds of percent before recently falling by more than 80% in 2 months. Although the Ethereum network has long-term potential, there's no justification for images of apes to be worth hundreds of thousands of dollars. Gates recently blasted the Bored Ape Yacht Club for lacking any useful amenities. The S&P 500 has remained more than 15 above its pre-pandemic peak. Gates does not believe that to be the case because the economy was much stronger before the pandemic struck and supply-side growth was also booming. Since the pandemic has a significant impact on both consumers and suppliers, money printing cannot simply restore economic activity to pre-pandemic levels. Gates also doesn't think the pandemic is gone despite the difficult economic environment. Gates warned the Financial Times that there is still a chance that this epidemic could spark a variation that is considerably more deadly and transmissible. He continued, "I don't want to be a voice of doom and gloom, but it's much above a 5% risk that this pandemic we haven't seen the worst of it," indicating that in addition to our high inflation and liabilities, there's also a possibility that the epidemic might worsen. Together, these elements raise the possibility of a terrifying economic and social disaster in the U.S. Gates claimed that productive assets are his area of expertise in investing, but his most recent quarterly filing for the first quarter of 2022 revealed that he has been selling his assets. This includes more than $1.3 billion worth of Berkshire Hathaway stock, over $500 million worth of Caterpillar stock, and a wide range of other stocks. We must examine Michael Larson's approach to comprehend why Gates is selling his stock. Larsen is the mastermind behind the enterprise. He is adept at maximizing alpha, also referred to as the risk-adjusted return in the financial industry. Gates's net worth decreased just slightly during the 2008 crisis, according to individuals close to him, even though the market plummeted severely. Although Larsen has kept his investment technique a secret, we can infer from public documents that he mimics Buffett's approach. Looking at the holdings and Gates' portfolio, it is clear that the majority of these businesses would not be affected by changes in the economy. Waste management stock, which Gates holds for $3 billion, is one example of this. No one will cease disposing of their trash because the stock market is down 50%. Diversifying into other asset classes is another element of Larsen's plan. Due to strong alpha and diversification, Gates is the largest U.S. private owner of farmland. Since people will continue to consume food even in a recession, farmland has had an average return of over 11% since 1991 with no negative years. This enables farmland to have a high alpha because it offers high returns with little to no risk. Larsen is also well recognized for investing in non-traditional assets like private equity, which entails buying out private businesses in a manner akin to buying out farmland. For individual investors like us, the equity sector is unavailable. But for Gates, private equity is a terrific opportunity to diversify and further hedge his portfolio. This ends our video for today. Tell us in the comments area below if you're selling stocks similar to Gates. Please click the like and subscribe buttons if you like this video, and we'll see you in the next one. Thanks for watching.